All right, good evening, guys. Ken at Tortoise Capital. It is the nightly strategy podcast for September 8th, 2021, Wednesday night. Let's get started. All right, so. All right, so today the that RL10 rollover is continuing, putting a nice lid on this. Yeah. And we still have the RL10 here is in summer, and it has crossed the baby dragon already, and here's the edge of the dragon. So pretty soon we will be looking at an RLXD. So the dragon extension is right here. So this is where it would enter the dragon. That's where it would exit the dragon. At this rate, that probably happens in 2 days if it continues to suffer. Today we had price depart the dragon and then recover. Let me zoom in a little bit on that. I noticed that the drawings don't scale on this. Okay, that's fine. All right, so today we had the price penetrated the edge of the river and drove down almost to the PSAR flip, but then reversed, and then had a nice close back here at the spine of the dragon. Tomorrow the PSAR flip will be here. You notice that the 3-period hull that's the shortest term momentum, is pointing sharply downward. And the RL10 crossed the baby dragon here. They are both sloping down. The 30 is still healthy and up. And after all, you know, we're only this far. Dang it, I did it again. That's what I wanted. I needed the prices on there. We're only this far. Here's the price. We're only this far from that RL, or the all-time high. You know, so we're at like 451, and the all-time high is 454. You know, so that's like plus $3. That's only 0.75%. This little divergence from the all-time high is only 0.75%. So it would take a move of about today's range. If we got today's range stacked on top of this, then it would be up, and away. So we're still pretty close on the upside, and that's why the RL10 is still solidly in the summer. So this is a market that is exhibiting some topping behavior. Now, this is where we would expect that to be a bottoming tail if we thought this was a market that was just going to continue to grind to the upside, in which case this would be a bottoming tail. So we have a large range. The open and the close are very close to each other, and they're near in the top third of this large range day. So you have a harsh sell-off and then a strong recovery, and it closes near the top of the bar. And so that would make it a bottoming tail, which would it would have cleared the deck of all the weak hands, and then up it goes. And then this is the price here at 454 that we would really take as evidence of actual genuine continuation. You could argue, yeah, it's the RL10 really at 453.50. So I would not be offended if you took 453.50 as the place to get long. You know, that's perfectly consistent with our methodology. Risks to the downside: as soon as it violates the Z1 edge of the river and the southern skin of the dragon, now that clears the way for a move down to the Bollinger Band mean, which is over here at 450 or 445, right? So that is a from 450 to 445 is about $5. That would be 1.25% is a sell-off from here down to here. That would be unsurprising. That would be the reversion to the mean trade. And so there's a couple checkpoints where you could decide where to put your exits. I think the edge of the river and the southern skin of the dragon is certainly one here at 450. I think the 1 day low is key. That's going to coincide with tomorrow's PSAR flip. So that one feels actually like a really important price level at 449. Today's PSAR, obviously, and then it's this 10-day low, and then it's the Bollinger Band mean. So there's 1, 2, 3, 4, 5 different price levels that you could consider. And again, the reasons to be thinking about exits in here is because of the topping behavior. This was the 1, 2, 3 exit right here, because you have a swing high right there. This one, when it closed, it had made a lower high, so that now makes, in retrospect, you can say that's bar 1 and this is bar 2, and so this one opened inside that range and took out the previous day's low and in bar 3, so that is the exit point right there, and so that exit would have had you out at about maybe 451.8. That's a classic 1, 2, 3 exit. Okay. Looking a little bit longer term, looking out at the 30 days. So we've got the 30-day low down here at almost Z-2. We've got the Z-1 here. We've got the 2.5% sell-off is the next price level down below the Bollinger Band mean, and then the Z1, and then this one is basically the the collapsing dragon on the RL10, and the dragon itself is all right in here. That's the CD. So for me, I don't like giving back that much of this nice move. So you had a nice move here, and this the 1, 2, 3 exit feels like you gave it enough room during all this sideways chop that if it was going to go, it should have gone, and it didn't. And now it's threatening this. And so I would rather be out wishing I was in than in wishing I was out. It just feels all I can see in here is the risk. But then that's all I can ever see is risk until I take a second look, and then I can look at reward to the upside. In this case, it's pretty straightforward. It's either the all-time high or the peak of the RL10 to indicate freshness and going. Okay? So that's my cautiously optimistic, but respecting the downside. I feel like we're in the intermediate here of shifting gears. Is this gonna pick up the scent and keep going, or is this going to be the moment when we get back to the 2.5% sell-off en route to the 5% sell-off? Remember, a lot of folks look at all of this as noise, and so what we're doing is trading within other people's noise. That's an area that they don't look for refinements, but we can make a living inside other people's noise. That's the intention. All right, let's take a look at the sector performance. So today, the market was fractional loss at minus 0.12. Treasuries were up 0.68, and they were the best. So they stared at the 145 key price level and reversed today and gained 0.68. Then the market at minus 0.12. Diamonds were next at minus 0.2. The Qs at minus 0.35. The Russell took more of a significant loss at minus 1. And then emerging markets losing the thread there at minus 1.5. So let's take a look at the few things that outperformed today. So the S&P at 0.12. You had Microsoft flat. Consumer discretionary, Tesla above 750 now, so it's held the 700 and 7.25 and is now above 750. That feels important. Wheat and precious 0.31, blended commodities 0.7, consumer staples 0.86, oil 1.1, Virgin Galactic 3.4, Ethereum up 3.9%. That still feels vulnerable to me. So not much to the upside at all. When consumer staples are the leading sector, that's really a defensive signal. When you have staples and treasuries, along with commodity-based things like wheat and oil and blended commodities, that's sort of a defensive signal. Very narrow strength. On the weak side, again, here's the S&P. The things that underperformed were many. Finance down 0.24. Tech 0.4. John Deere 0.4. Ag 0.6. Bitcoin Trust 0.77. Lumber 0.87. Biotech 0.87. The blended large cap crypto 0.9, materials 0.96, the other lumber 0.96. Tech leader Apple disappointingly -1, Mexico -1.1, oil exploration 1.15. So that's an odd anomaly when oil exploration is -1.1, but oil was up 1.1. So that's we got to see which way that tension is resolved. It feels like it's to the downside, actually. More risk on the downside, I think. Yeah. Looking at some more underperformers here. Then it's TX, the steel company, the FANGs down 1.2, lithium 1.25, energy, commercial real estate, blockchain. Now we're getting into the significant losers there. Alcoa, Archinomics, Marijuana, Moonshots, PayPal, Arc Innovation -3%, Devon Energy 3%, Clean Energy 3%. So all of those energy derivative companies were down on a day when oil was up. So if you're an oil trader, I would be, that feels like a word of warning about upside price improvement. When all the derivatives are down, that's not a good sign. And now some more commodities. We got Cliff -3.2, U.S. Steel -4, Coinbase 3.25, Square 4%, Robinhood 5%, Brazil 5.7%. So the weakness was wide and deep, and only a few things to the upside. So this really feels vulnerable. This rollover that we're looking at here, that feels really vulnerable to me. Even with the afternoon, buying pressure on lower volume, that feels very vulnerable to me. So let's be positioned accordingly. Again, I would rather be on the outside wishing I was in than on the inside wishing I was out. I think you could actually make the play, as a tactical trader. I think I could bracket the open and the close pretty tightly, just like that, and then be ready to exploit that in either direction. Long if it starts moving up out of that box, short if it breaks below that box and re-enters the river. Then it would be a non-controversial move just to get to the daily low, and then it's Katie bar the door if that fails. So that looks like a tactical opportunity. Feels more like a grinding work were this to resume to the upside. So that's my read on all that. All right, let's take. There was only one chart posted today. This is Cliff. Luke's got some learning points to cover in here. I like the long side entry because there's a gap down. Let me get all of this. Let me mark this one up. So this was the close. So there's this gap, and it sells off, but then it can't fail any further, and you get these grinding, rising bottoms, and then finally that lid gets blown off and it breaks out and crosses the dragon. That feels reasonable. Now, for this to really work, you're looking to see it get above the previous hump of the dragon. So this is the tactical space where it hasn't proven anything yet. I mean, that's inside the river. It's not until this breaks out above the river that you feel like this has legs. So the venture is buying it here on the crossing of the dragon with a stop at the usual, at the PSAR flip, which is the bottom of the RL10. And that's a reasonable effort. It's so you're looking at one risk box to here, and then if it gets a 2R in hand, now you're up by the Z3 line, and that's where 2R would be, and that's where you could think about a second position, 2R in hand with momentum. Okay, that doesn't work, and it sells off. He takes the PSAR stop, reasonable. I like the immediate stop and reverse. That's great. Now, when we get to here, as he has noted, left too much on the table, you get to a Z3 excursion, and here's bar 1, 2, and 3. We got to be out here so that I can make bank on this. I should be capturing that. This one makes it a scratch. It got all the way back to the VWAP, and so we got to be able to cash it. Even if I cash here, I've still left almost half of it on the table, so we can't give back that full move. That was more than an R we gave back because the risk box was here, and we had more than a risk box in hand, and we let that scratch. So that'll just hurt your feelings. You don't want that to happen. A reasonable effort on the upside. There was a reversal. The winter turned to spring. He plays the crossing of the dragon and is in the position just before it crosses the VWAP. And again, if that works, we would expect that to get up to here in short order. And so with 1 unit of risk, there's 1, 2, 3. So that's a 3-to-1 without trying too hard, just within the tactical space. So that is reasonable. He does a better job cutting the loss. I'd like to see this a bar earlier, but that's a great short. And again, there's a 1, 2, 3. I should be exiting here. The RL10 is already reversed. It was riding it was pushing that lower boundary So I don't want to give back that much, especially if I'm sloppy up here. I've got to be better right here. When this fails, I like the short effort. That's a reasonable scratch. At least we didn't lose money. This re-entry, that's got to be here. And then I could make bank on this instead of scratching. This one got most of the way to the VWAP and then started to roll over. A 1, 2, 3 exit is down in here. So I could, even with a late entry, I should be able to make something on that instead of pure scratching. But if I take the preferred entry, I'm going to get a full 1R exit in there. This is a reasonable Kata 2 because you have a low, a higher low, winter turn to spring, perfect entry, good stop at the bottom of the dragon. There wasn't much in here, and then when this makes it gets to the VWAP and can't get through, and then this one doesn't get to the VWAP, I should not lose money in here. A minus 0.2 is essentially a scratch. This is way late, getting short. I think this feels like you're getting tired because this amount of time in here I should have been in that position. But again, I think this is where he's working on technique without skin in the game, and so maybe Luke's just going through the motions. Takes his 1R loss like a man, and then just there's nothing left in here. Sideways quiet channel. So there's some learning points in there. Even after a poor day of execution, to only lose minus 2 XR. So that's like this is a D day. So it was not an F. Manageable. And if we tighten up our work in here, then even that losing day turns into a winning day. So keep marching, man. Take your beating and keep moving. Good work. All right. A couple trade frames to review. So here's one. Excuse me. Okay, so this one is instructive. You know what we see this this breakdown from a Z3 pinch, and it makes strong support in here, a low, a higher low. There was potentially a Kata 2 on this move. Then it locks in this long sideways quiet channel with a Z3 pinch, and the VWAP is putting a lid on this thing. And so when this thing comes up and starts to make the break, I think you got to get in right here. You might have even gotten in a little earlier if you had read this as a Kata 2 and winter turned to spring, turned to summer. That might have gotten you in at the breakout of the river. But even if you get in here, that's still reasonable. And then all it has to do is get above this price level. If it gets above there, and then it gets to yesterday's VWAP, if it gets past there, everything's going to be good. All good. So the downside, if this breaks right here, this feels like strong support, strong statistical support, so that's where I want to be short in a large way. If it breaks below the RL270, then I could be short an extra position. And then if it breaks below this cluster here, see, I like getting that second position here, because now I've got two positions in the money, and it comes down and tests this support level. And if that breaks, man, it's just gonna get crushed. And then we'll have three positions on a runaway freight train. That feels like a collapsing dragon, because here's the dragon's belly, and it fails in a big way. So in this sense, all the entries that we're getting in this region, that would be what we'd call a pocket entry. which is front running. You're front running the collapsing dragon, which is the primary signal. Okay. So let's keep in mind that we want to be in this thing as it is crossing the VWAP. So if I can do that, and I can put my standard little wrist box on this thing, something like that, as long as it stays north of that yellow box, I should be okay. And then if this thing gets above this cluster, I should really be okay, right? So there were some reasonable moves inside that. We might have captured a move like that. We might have re-entered on this Kata 2 with that kind of wrist box, and then probably been able to capture a move like that with just using the manager's exit of the Bollinger Band mean. Like that might have gotten us out, but we would take both of those trades and be happy. And so that's in Ethereum. That's the ETHE Ethereum Trust. That's about a 20-cent risk box on that one, and about a 30-cent risk box on this first one. And it's making 1, 2, 3, 4R on this green box, 2R on that box. So there was a potential 5 on the intraday trade after a harsh sell-off to support. So Ethereum's going to bear some watching. Yeah, Luke, that isn't even tough love yet, man. I'm treating you gently. You should have heard me in the classroom with the students today, flogging them properly. So I might have the opening range breakout box, something like this, visual box trading, because yesterday it closed here. So if it can get above, yesterday's close, it feels like that could be a good thing. If it can get above that line, we'd be happy. On the downside, any breakdown from here feels like that could be amazing because it's continuing to fail. Right. So I think I could get a tentative entry if I did something like this. So if it broke out here and then adding a second position once it clears congestion, and then on this one, on the downside, I'd want to be short, I think, right away from there. And then if we just made another box, 1, 2, I'd want to have one short to there, and then this is where I would want to pick up the second short, just on the basis of R multiples, right? So I'll go like that. So we would think of that as visual box trading. Now, I want to show this this little region here in the middle. That blue area, because the upside is harder than the downside, it's more of upside is more of a grind most of the time. That's why I don't like getting that second position until we've really cleared 2R in hand and have no resistance overhead. So that's why I would try to look something like that. And that's where I'd want to add that second position. But on the downside, as soon as that thing starts collapsing, that's the direction it wants to go. And you can see that it is already yesterday's VWAP. Yesterday's VWAP. Yesterday's VWAP level was up here, and it gapped down to here. So once that thing is already in the mode to start failing. So once it fails out of that opening range, 5 or 6 bars, smash, and then second position here. So that's sort of the generic strategy that I would like to adopt in this. And then pull this thing away. Yeah, so there was some. The first position gets us to 2R in hand, and then somewhere in here we probably would take this exit up in here. That would not be surprising, but then we would want to get short again either here or on the collapsing dragon to get that last piece. So on Brazil, there was an opportunity there, almost like a hybrid frog, to get to pick up a couple 2 to 4R intraday. Here's one where we have this was yesterday's close right there. So just to block that off. And now I can think of this is that sideways quiet channel box from yesterday where the Z3's pinched. So that feels like an important region. And that's about all the extra, that's about the size of the noise box. When there's no directional movement, it's the width from Z3 to Z3 gives you something like the noise. So what did we end up getting on this one? Well, there is there's a gap up and a run. You might have even gotten enough in here to get the opening and then get paid up in here somewhere if you are an agile hybrid frog trader. Once that starts rolling down, and now you see it the RL10. Oops, sorry. Now the RL10 has crossed back below the VWAP. The RL10 has crossed below the VWAP, and this thing is already through the dragon, and it's closed that gap. We might have been, if we were agile, have gotten short somewhere in here or shorted somewhere in here, but even getting short here feels okay. You might wait to get through here. So either one of those I would take. I'm going to draw a couple. This would be the amazingly agile entry, crossing the spine and re-entering the river, entry short. A new low of the day short right there. Possibly, when it breaks the Z3 pinch from the previous day, right there. And you might also think of that as the VWAP, yesterday's VWAP. If that gets violated, that is an absolute no-brainer to get short there. So you could decide where you want to get short on a violation here. So 1, 2, 3, 4, 5. I could even argue that breaking the RL270 from the day before. So there's 6 different places you could get short inside there. And even if you waited for the 6th one, it may not be too late, although you've given it quite a lot of room for the extra confirmation. And then you would say, look, if this thing violates below the Z3 line, that's a decision point too. So if I got short anywhere in one of those top 6, I got to be thinking about, don't I need a second position in this thing before it breaks below that Z3? Because that would be a signal of more pain coming. So those are the kinds of pre-planning for standard entry points that you can do in visual box trading. By this time, any one of those 6 or 7 entries should have you short. You should have 2 positions in with good money in hand by this time. And even possibly adding another position here on the, when you see that the Bollinger Band's excursion and then another collapsing dragon and spring turns to winter, why not? It's already past the previous Z3 excursion, so that's a really strong directional move. Oh, there's more. Yikes. By this time, you're probably thinking, look, winter turned to spring, the dragon is rolled up, the RL10 is rolled up across the baby dragon, there's my RLXD. Shouldn't we be out of this position here? Yes, we should. In fact, you should already be thinking about, maybe that is a target. I'm setting a target for the upside at return to the VWAP. This would be like the VWAP magnet trade. You could be thinking of this along with some kind of risk box that looked like that. So how much is the risk? Your risk on that trade is only the little yellow box. What's your potential reward? You're looking at this kind of reward. So a nice, excellent exit after that long sliding short that gets paid really well now sets up conditions for the reversal move back to here. And at the same time, if that thing fails, well, then you're just in a collapsing dragon right here, because that's going to be a strict rule. So that's the risk. What are we worried about? Place your ante and then get in there. And then you could make decisions about where would I add a second position if it leaves the river, if it crosses the RL270, if it crosses the VWAP, somewhere in there is some kind of reasonable second entry criteria. So if that's what our trade frame looks like, the trade we captured, and then it turns out that there was no follow through, and it closed the rest of the day just getting smoked, or the rest of the morning just getting smoked. So this exit here turns out to be pretty decent, and there wasn't much more to get. And you're actually now starting to see, when you get the Z3 pinch, you're thinking, all right, failure to fail further. So a breakout from that would now give you the trade where you're looking for a return to the VWAP, which is not quite as good as it was earlier, but still a reasonable reward to risk ratio. And I wouldn't be offended if you had, taken that, either one of those entries in here, so you get some kind of entry along this line. Anywhere in here is not bad. And later in the day, I think it actually got back towards the VWAP before failing some more. So the point I want to make there is the getting a read on on those gap up and then fail and they cross their own VWAP and starts to suffer, that's an indication that there's no follow through and that you got some potential on that trade. Okay, and then that second leg right in here, man, that's the entry you got to get in this this region in here. That's really a crucial price pattern right in there. You know, this shelf that was forming of support collapsed, and that's why we call that the collapsing dragon, and now the dragon is running. And that's that second leg down. Standard hybrid frog and standard second position. Collapsing dragon, standard exit, and reframing. That's as routine as it gets. And that's in Devon Energy, which just trades like a champ. Let me know if you found those 3 case studies useful. All right, next up is we'll take a quick look at the reports. All right, so we are into bullish quiet, overbought on the long term, grinding down on the shorter term. Price relative to the 200 is starting to stall. It's still bullish, but the red of the 10.83% is saying that the bull is running out of gas. Not surprising. The risk on from the risk Z is still there because we're above the zero line. But again, this is becoming a critical state. Europe IEV, the European 350, that's the European equivalent of the S&P 500, is signaling a channeling, and we always pay attention when that happens. Min Pains, Procter & Gamble, Home Depot, McDonald's. That's the opposite of groovy tech. That's just basic staples right there. Then there's some Nucor, 3M in the industrials. Yeah. Four dojis. No breakouts on the NDXs. A handful of good auto framers. One good 5DD here in Nike. So Nike is of interest. It's got an RSI 2 value of 1, so it's been washed out. It's a channeling and an overreaction and a 5DD and 3.5 to 1 and got a strong frog quality number. So that looks like an ideal candidate for short-term trading tomorrow because all the goodies are stacked up. And longer term, it had some really good moves in the 3 months, 6 months, and 12 months. It's only recently that it's been smashed. So Nike feels like it could be well postured. Yep, sure enough. This long-term support, it has come back to it, and now it's at Fisher cut bait time. That is such a critical state for it right here. If you went back and listened to Ken H. and I talking about this thing, we were talking about what to do with that gap, and we had some nice swing trades through here. The natural exit is here. It peaked and couldn't follow through any further and crossed its own sniper. The sniper exit or the managerial exit, anywhere near, you got a nice swing trade from here all the way up into here. And now it's pulled back to this crucial support level, and it either holds here and resumes, or this collapses and it runs down to the original gap, and if that collapses, it covers this great big gap and comes all the way back maybe this far. So that's the very definition of a critical state. And if you saw the Tharp Institute email today, that was they published the little short essay on standard trade framing and what we mean by critical states. That's worth looking at. Search in Patreon for the trade framing flashcard. That's some good work. A critical state flashcard. That's some good stuff. So I really like Nike as a critical state example. Let's look at the ETF 30s. Just a few auto framers. A reasonable number of channeling and overreactions. No other signals to speak of, though, and no breakouts. This is a market that is trying to find its next direction now that Afghanistan's off the table and looking for something to make sense of the world, right? The auto framer's starting to add as the market is sliding a little bit. There's some reasonable choices in here, and there's some There's American Express, Nike is at the top of the stack, J.P. Morgan, and finance always of interest, 2.4 to 1. So there's some goodies inside there. Pfizer, Cisco, and Walgreens in the pinch. You know, the daily squeeze. Multi-time frame NDX summary. The proliferance of reds just shows you how wide the pain and suffering was today, with only a few things even in the green. The defensive plays of utilities, oil with the anomaly we've already addressed, and treasuries as a defensive play. Otherwise, a sea of red, the Red Sea. And there's Visa, McDonald's bucking the long-term trend of the market, and then Procter and Gamble, and good old buddies like Home Depot and Disney quietly getting it done. But very little else in there to really draw your attention. All right, so that's everything we got. We'll be ready for tomorrow with some critical state trade framing, and we shall see you tomorrow. Let's go get them.